Hi traders, hope you're doing well. Welcome to my video on the volume adjusted RSI indicator. In this video, I'm going to show you a simple strategy that you can use to capture moves such as this one for around 500 pips. This is the MetaTrader 4 MT4 platform that I'm using. You can use this strategy on any trading platform. You just need the volume adjusted RSI indicator. If you search online, you will find it. Here I have it attached to the chart. This is a pound dollar 1 hour chart. You can use this strategy on any trading instruments, so Forex, stocks, commodities, cryptos, indices, etc., and any chart time frame. Personally, I prefer the 1 hour, 4 hour, daily, weekly, monthly, the longer term chart time frames, as they contain more price data and therefore, based on my experience, signals are much more reliable. And it helps avoid some of the choppiness and noise you see on the 1 minute and 5 minute charts. I'd rather trade smart, not hard. When we capture big moves like these for hundreds of pips, I'm not sure why we'd be pulling our hair out trying to scalp a few pips all day long on the lower term chart time frames. Okay, so what we're looking for, this volume adjusted RSI works the same as a standard RSI. So basically, when it's high, it suggests that the market is overbought and maybe due a reversal to the downside. When it's really low, it suggests that the market may be oversold and due a reversal to the upside. Okay, so that's the first thing to be aware of. You can also be aware of your divergence, which is when it makes lower highs, it suggests that the market is going to be falling down. Okay, just as when it makes higher lows, it suggests that the market is moving up. Okay, so that's the basic things that we look for in this indicator. What we don't do is we don't just buy and sell every time it changes color. Okay, first we determine which direction we're going to trade in. How we do that is we look for a trend, and then we see one here, clearly a downtrend. Okay, we can see that the market from here started to fall, and it's a clear downtrend. We also had a breach of this trend line, which held up quite well. If you just zoom in a few there, you can see this strong support line, big breakout down through there. Wait for a pullback, and then we can hop in on this trend. Market's making lower highs. All the signs are there. Got the divergence, bearish divergence on the adjusted RSI indicator, volume adjusted RSI indicator there. Now, timing the entry is the key here. Okay, so how I would time the entry is I would wait for a pullback. So you see after this drop here, okay, and that breakout, then we were on for the sell in the downtrend. I'd wait for this pullback, you see here, and I draw my support line. Okay, probably back as far as here, even. And then as soon as price breaks out, we can either trade on the breakout there, or to avoid a fake out, you can wait to see if the support then holds up as resistance, as it does. Again, 1 hour chart, so we know that there's plenty of price data included within this these candles. If you went down to the 5 minute, 50-minute chart, you see that's much more significant support. It would look like more significant support come resistance. Okay, and you can enter on the breakout there, and then looking at the RSI indicator below. Okay, the key to spotting this entry with this indicator would be you first of all, you don't want it down the bottom. Okay, you don't want this indicator low because then you'd be selling into an oversold market. Okay, the key is if you're selling, you want it to be ideally there or thereabouts in the overbought zone, at least above half. Okay, and what you could have done to identify the pullback area here, you can wait for it to change direction. Okay, so as it goes up, we knew the downtrend was on following this breakout, and you just wait for the indicator to go up, and when it goes up, that's your signal to start looking for your pullback. So that was around here, which would have been a perfect time to draw your support and have your trade ready to go there. Perhaps more aggressive traders would just trade as soon as it confirms a color change. Not in an oversold area. So here would have been oversold if they just waited for it to go up here and then change color to the downside there. They would have perhaps considered taking that entry there into this trend. Okay, stop loss on the breakout. If we take the breakout trade, I put it above the recent high, so around 20 pips, which is relatively decent for the 1 hour chart. And then what I would do is when the price falls, I'd move the stop loss to break even, just lock in the trade. You don't want a winning trade to turn into a losing one. And as price continues to fall, just move the stop loss above the highs, above the high there, 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 above the high there. And we may get taken out but we've maximized the move as much as possible. You can of course close part of the position on the way down. This was a good trade for almost 300 pips. You can close part of the position if you want, let the rest run. It depends on your own money management. What I wouldn't want to do is I wouldn't want to have a 20 pip stop loss, see price fall to here for 100 pips, exit the trade, which would have been a great trade. However, just leaving too much on the table. Okay, can of course re-enter. Principle's the same. So you wait for this indicator to not be oversold, to turn up, and then as it starts turning up, what do? We look for the pullback and we draw our support and a carbon copy trade, breakout of support. Market is again making these lower highs. Okay, so we get a nice wedge formation there. We also had that wedge formation there as well, and you can just trade the breakout there. Okay, or as I said, you can trade when it changes direction of color. Just remember the key is we're trading in the direction of the trend. So either when it changes color or on the breakout. Okay, keep an eye on candlestick patterns as well. Can help to confirm trades. You've got a nice 3 inside down candlestick pattern there. It's a bullish candle followed by 2 bearish candles. Okay, nice engulfing candle there. Lots of confirmation of bullish momentum. And again, another entry here. Same principles. You have your pullback. You can draw your support and trade a breakout of that support. Even down here, again, pullback, breakout. One thing you don't want to do is end up selling too low. Okay, you ideally want to get in as early as possible. Don't get FOMO, fear of missing out, see this move and then sell here, because you probably just get caught in a bear trap. And then as you see this divergence to the upside, okay, you might just want to wait for the trend again. Okay, so that's an example of trading with this in a sell trade. Okay, just again, if it's all the way down here, it can keep you out of trouble by preventing you from selling, because this is the oversold area. So for example, at the end of that move there, you can see it was all the way down. You probably wouldn't have sold there. You want to wait for it to increase in value and sell around here somewhere on the breakout. Okay, so that's in a downtrend. Well, another clear example there as well. You've got your lower highs. Okay, you've got your support trend line holds up really well, then a breakout, and then on the pullback there, nice level of support. Probably goes back to there even, or here. Nice level of support there. M chart formation and a big breakout there to the downside. Again, oversold, wait for it to move back up. That's your pullback area. You can enter on the change of color, as I said, which would have been up around here, or wait for the breakout. Stop loss above the high, and then just trail. So around a 25 pip stop loss and trail the price as much as possible. Around lots of profit potential, over 300 pips on that move there. In a bullish market, it's exactly the same. So you could just look for a clear trend. Okay, you can just mark your higher lows, use a moving average if you want. You don't necessarily need to, but I appreciate that some traders like moving averages on their charts. Personally, I don't think it's necessary. We can look at the chart and see that the market is moving up. And then we can just time our entry. How do we do that? So we wait for an overbought like this and then it to drop. So that's the pullback. And then we draw our resistance and you can trade a breakout of that. Okay, or when this changes color in the oversold area, because we're buying into an uptrend. As price continues again up, and then that's the pullback there. When we get the pullback, we can draw our resistance and trade the breakout. Resistance, trade the breakout. Okay, up, down, resistance, trade the breakout. Up, down, resistance, trade the breakout. Ample opportunity to get in on this trend. Okay, let's say we took this breakout trade, stop loss below the low around 20 pips and up to 400 pips profit potential, locking in the trade at break even. As I said, we don't want to win trade to turn into a losing one and just trail the price below the low, below the low, below the low, below the low, trail it below the low all the way up and close part of the position if you wish to bank some pips. Okay. Again, when it's at a peak, you don't want to buy at a peak, okay? Now that'll keep you out of trouble. Say you've seen that big candle there, not only should you not buy because we've already had that big run up, but if you just need an indicator to tell you that explicitly, this will tell you price is overbought, do not buy now, please. Wait for it to drop down around here somewhere, and this can be a good time entry. If we're in a strong trend and you get a deep drop, genuinely the deeper it is, the better for an uptrend, that is, vice versa for a downtrend. Okay, so you can see when it drops in here, that would have been a nice entry there. Even here, this drop, okay, is ideal as well. So this indicator is good for helping you time entry into pullbacks, trading in line with the trend. Just make sure you've got your trading emotions in check, so don't let negative emotions like fear, anger, and greed cloud your trading decisions. Trend lines, support and resistance, candlestick patterns, all good to be aware of. Good money management and practice on the demo account as much as possible. Hopefully you found something useful in this video. I do appreciate you watching. If you've enjoyed it, please like and subscribe, and I hope to catch you on the next one. Take care.